Hello guys, welcome to the Trading Parrot. Yesterday, after the FOMC meeting and their decision to keep the interest rates at 4.5%, it seems to be that the price action, surprise, it went up into 105k. In today's video, we're gonna focus on the challenges that the price must overcome to be able to get into where the liquidity is, starting from 107k. We're gonna look for the areas that we must defend, call it the retest. There is a bunch of data that I wanna show you that could make a retest the next thing that we need to be focusing. And of course, any retest can fail and take us back down, so obviously we need to put a keen eye right there for what is the risk of failure. Of course, if we see that there is a very low likelihood of failing, we can continue riding our swing trade to higher prices, particularly if the shorts make that too easy for us. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Yesterday, I uploaded a new tutorial called Technical Analysis on Any Data on TradingView. It consists on a method that you can pull data from any spreadsheet, upload it into TradingView, ideally something that is not available already there, and then use it for technical analysis, apply indicators on top of it, fully integrated with the rest of the chart. I did it with my YouTube number of daily views from 2020, and I managed to do actual TA and have some insights that are also pretty interesting with the current price action. This is not the only tutorial I have here for free. Indeed, if you go to my main page on on YouTube and scroll down, you're gonna get to this area of trading tutorials. You can watch them all, they're all free. Particularly, I recommend that you watch the one for trading different to learn how to do liquidation levels, my old tutorial about super trend, reverse RSI, and my free tutorials covering RSI and CPR levels as well. Get yourself educated for free. They're just there available for you. Let's go into the content. The first thing I want to see today in the charts is whether this move up into 105k attracted too much retail or not. We can see that so far in Google Trends, we haven't seen any reading to the upside. On CryptoQuant, amount of traders with a volume between 0 and 10k in the past 30 days is still at the very lows, meaning that retail still can't get bothered to come back into the market. They are not getting motivated, not even with the move to 105. And there are two short answers for why is that. Answer number one is because retail doesn't enter this early. They get smashed entering at the very highs of 110, suspecting that that was gonna go to 150, and right now they're still underwater. Some of them already closed their positions at a loss. We can confirm that because of the SOPR being so close to the low end, meaning that the price action or the market maker managed to convince retail once again to close at a loss. Our latest reading is very close to the bottom, meaning that many positions have unfortunately been closed at a loss at this area. And looking at long-term holders and the whales, they're doing actually the opposite. With Ethereum, we got a similar picture when we visit 0.98. So again, closing at a loss, they are just burnt out and they are seeing now 105k, and in massive anger, they come to my channel and write down comments. You are dreaming to think that we're gonna get to 105. Now that we go to 105, they go completely quiet, back to their cave. And that's why you subscribe to the channel, because we see all this data. We are doing X-rays to the market from so many perspectives that combined are giving us definitely an edge. Think about this. A few days ago, I told you that we can see a C wave into here. It was less likely. We were prepared for that, but we were with our eyes into 105 because of CME gap, because of fair value gap. We have done that at the moment, and since we ran out of that stimulus from the CME gap that has been filled now, which by the way, we are leaving one at 102, take a note about that. It's very thin, but is there. So if we get this retest, that is one of the areas that I'm envisioning for a potential pullback. Not guaranteed, but keep an eye on that. And remember that 102 is priced in CME, which is more expensive than most of the exchanges. That means that on BTC price, that can go into 101.2. do? We also ran out of fair value gaps to the top. And since we've been ranging, the risk now is that we continue to range, right? So we went to this area, we left 2 fair value gaps, came back down, we took them all, we put a new high, and we came back down and we created another wave of fair value gaps. Now they're all gone. So we have now chances that we go back down somewhere in there to take the CME gap, which I think is around here. Less likely, but still possible, the 96 still with a rejection if we get a rejection there, or the continuation, okay? And in today's video, the focus is let's try to dig deep into the rabbit hole to see if we can spot something that makes it just too attractive to continue up, or if we need to reduce our position to add more on a pullback. So let's see. Data point number 1. I'm going to remove this target. I think I'm already happy with that. So I'm just going to remove it. And I'm going to put a trend line in here and see how well we protect this uptrend on the 4-hour. We can also use this line now to identify support for a 100% healthy pullback. If we pinch below this, then we start taking bullets and then we start getting a little bit more sketchy. So let's assume we do a move like this. Then we get into 56 RSI. Let's go with this and let's find where that is in the price. It's very close to the price. It's 104.4. Okay, very recurrent number. We've been talking about 104.4 all this time. More on that when we get into the weekly time frame where we really care about that number. So this means if we defend the 104.4 on a 4-hour basis, meaning you can pinch below, but you have to close the 4-hour candle above RSI 56. And this is a moving target. As we go up, we need to defend higher levels of RSI as well. So bear that in mind as well. Daily time frame analysis. Are we healthy on the move up? Well, let's say this is our pivot, right? Because we managed to defend that. We closed the day above it. We are now on the way up. More than 50% done towards the target of 107.6 now. That is if we do this. Notice that I draw this line at a point where we were below support, still with hope that we can get into resistance at RSI 65. And I think in order to achieve that 65, we need to prevent the RSI now to start doing something like that. So that is our support on the daily, which is 54 at the moment. The 65 remains the same. The 35 is still there in play. So let's update my reverse RSI. If you want to use reverse RSI, the one I'm using that has 4 values and support the channel, you're more than welcome to do so. You can find them in my website, thetradingparrot.com. Just make sure you check what's included so you identify which tier is the one that you need. So we need to move this to 54, and that is our daily support. At the moment is 103. The target continues to be 107.6, and then the disaster area is 90.5, which at the moment coincides with the bottom of the range, and that is there in case we saw a daily rejection back below resistance. If we did another one of this, by the way, this deviation above the top of the range was saying that we need to get into the bottom of the range. We haven't done that, so we have those conflicting data points saying that daily should make this rally back down. But that data point is conflicting with the liquidity at the top. At the moment, there is an arm wrestling of data points most of the time. That is the challenging part of analyzing data. You probably already noticed that when you think, hey, you're calling for both sides. No, I'm not. I'm putting data points on top of the table and I'm trying to figure which one matters the most, which is definitely a huge challenge. A daily close today beyond the top of the range is bullish. A daily close followed by later coming back again below the range is definitely very bearish. Weekly time frame, that 104.4 is right there, and at the moment we have the perfect candle to take out the previous highest close on a weekly candle in all history of Bitcoin, which is great. We need that, but in order to fully destroy and invalidate the case of the M pattern in here, in my opinion, we need this week or the following week to take the all all-time high and close above it. In my opinion, at the moment, the SOPR is in very healthy levels. Why is that? Because the more people that have closed at a loss, the closer we are to a bottom. And the more people are taking profits, at big profits, at the top of the range in any of these three coins, the closer we are to a top. And let's look at how this is at the moment on the daily time frame compared to the previous cycle as well. I mean, there are similarities, but we are deviating big at the moment. The MACD bearish cross could potentially just last one day if we carry on with prices around the 105. Today closing could print a new bull cross daily on the MACD. Remember, I made a reference to this area in October where we were at similar levels of MACD and we were constantly flipping as well. And I say, don't necessarily take a decision on the bearish cross in here because sometimes MACD does that, and that could be the case by the end of today. Going back into the weekly time frame, you can see that now we are beyond the yellow line. We've been since pretty much 13th of January going up and down, but with the caveat that every Sunday we close below it. So it's been 2 Sundays that we end up rejecting the yellow line and threatening to do something similar to what we did in July, which is to see rejection at 68, 69 and go all the way down to 49. So that's 20k down, and that's why it's so important. This trend line is still relevant on the RSI weekly, and I think a close on Sunday, let's say at a level of 70 or more on weekly RSI, it is critical to either call for a journey to top of range at 78, 79, or to get a rejection with a lower low and a painful ride into potentially 88, 89, 90s or whatever is the bottom of the range right now. Notice that a rally to the top will be a rally into resistance. We got this line in here and it is resistance, and I'm just speculating that we should be forming somewhere in here a channel. We don't know the direction, the slope of that potential channel. I'm just using this line, and the same slope placed there is giving us resistance at 73. If we break beyond that, we could even rally to 80, but that is pure speculation. It's not mathematics, it's just based on the typical things. If we close like this on the weekly basis, we are not just breaking beyond the yellow line, but also potentially putting a bullish cross on the weekly stochastic RSI. And the RSI level of resistance in here is 104.6. So it has increased from 104.5 yesterday. And the final target, if we get into 76, it's around 120. This is a moving target, and it fully depends if you are targeting the top of the range in here with the gray line, or if you are very optimistic that we can hit the top level of 80. That requires a rally into resistance, very impulsive. Monthly chart, of course, we continue beyond 70 in here. Watch my previous videos where I compare this peak in there with this peak that we have in November, speculating that we could get green mountain still in there, counting the first month to be January, in which case we can get into February and March still being in the 70s and still please both theories. That's a way to do some hopium in here and discard this initial peak above 70 and compare it to that one there that is also discarded. We counted 300 days from the actual green mountain, ignoring the initial hill. Open interest is getting into the median in here, so it's no longer below the orange line. That is the entry signal, and that's another data point. So if you are entering late now at 105, bear in mind that you're not as close as we were to the entry. Remember, I add at 98, and those entries were discussed in previous videos. Large holders continue here in the 0.30, all healthy, all in the same direction of accumulation. ETFs at the moment continue to have some inflows, but they are very, very small. And I also have to mention that BlackRock had some outflows. Everything looks still positive from the point of view of ETFs. In the grid, we have reduced from 72 yesterday to 70. Interestingly, even with the price going high, higher. Long-term holders increased their allocation very small. They went back to where we came from, and I suspect that they did that during the dip. I already did some analysis on the short-term liquidity in the update in the morning, but if you didn't manage to watch that, you can see that we are work in progress in here with a continuous of green. If we had yellow or red right here, it will make it a lot easier, but you can see that we have a continuous of incremental levels. There is just a small depression there right at 107, but it immediately goes quite high, and then we continue to increase into this area. So that continuous increase should make it a great data point to say we have paved the way into 110 and new all-time high from the short-term liquidity. The opposite goes to coming back down. You can see that there is not much motivation to go back down in here. Not many longs enter there. They were so bearish. Market maker did a great job convincing them that we're going down, and just scrolls through your Twitter, watch the previous videos last week, and you're gonna hear every single video talking about the bear flag. And I am not saying that it's impossible that we don't go here. Listen carefully. There is a 20% chances that we go there and the bear flag still applies. That's why we are doing this video. This video is to identify the chances of going there. And from the point of view of liquidity, that is barely 20. I will say even 10% to go there at the moment, just looking at how much liquidity there is there, and that this whole journey has no motivation below the price at the moment. Very small compared to all this perfect recipe to take the top. Let's see. There can always be a correction in the general market, and then we delay those things. That is fine. If we delay them, we need to see how low we went, whether we broke structure or not. And let's talk about breaking structure. If we see a pullback and we go something like this, that is too small, guys. If we go just barely to 103, we are just putting higher lows. So it's so funny when I read the comments, particularly when I make an appearance on other channels and people are really not knowing what they're talking about. They see a pullback of 2K and they say Bitcoin is doing a huge dump at the moment. This video didn't age well. Gosh, guys, please study a little bit at least. Anyways, despite all the volatility, we are right there in the median, and a pullback is likely. We have crushed the shorts since yesterday. Now you can see that most of the liquidations, 60% almost, are shorts. The only thing is that there's been only 270. When we were liquidating longs, we were talking about almost 1 billion, so almost 4 times this. So I think this is another data point. Market balances out liquidating big longs and shorts, and particularly in a bull market, the shorts suffer a lot, and I'm not seeing yet that suffering in here, and I think that is another interesting data point. At the moment, the order book is looking that they really want that pullback, and here's where we pay attention at what sort of pullback they manage to get, right? They deserve one. Let's give them the pullback. They are asking here a lot. You know, the ask liquidity is the typical one where we get a pullback. For example, here there was this ask liquidity and we went back to 100. Here we went from 102.7 to 101.5, and here there was ask liquidity from 105, it pulled back to 103. So we have already done that thing. From here, 105.5, we could go maybe 104. You know, 104 will look perfect. You know, it's still within the range of the healthy pullback. Longs are kind of stepping back down in here from 65 to 52. And the closer we get to this blue line, the more likely we are producing a local top. So bear in mind, there has been a 20% reduction in longs in the past hours. And that is definitely at least creating a bull flag. That bull flag could become a little bit larger in the upcoming hours. That is also something I'm supporting and I'm fine at the moment, which is we have 234k delta affecting the longs, meaning that in this very short proximity, there has been a spike in longs. These are late longs entering just now. and they could get hit very soon. Another data point supporting that pullback is this area in here. You can see that we have the 110K selling wall, and then we have all these levels there. Below the price, you have like darkness, right? Above the price, you have ask liquidity. That's what we were seeing in high block capital as well. 47 million, 34, 52, 46, and 130 million. That is kind of the resistance that is definitely now calling for a pullback. Let's see what happened yesterday live in the stream. They pulled back, they pull out the liquidity at 103.7. We noticed that when we were here, and we say in the last 15 minutes, they remove it. After they remove it, then the price came back down to 101, and it went straight up. It shot up almost to 105. And then since then, it's been just going higher. There is some support with 500 at 104, talking about 104. And we also have 101.5 that they actually removed recently. Let's go back to the 4 hour and let's see the delta. And the delta is just going sideways. It's telling us that there still is, from this indicator, more shorts than longs. We haven't had a breakout from this trend line that I left there a few days ago. We could put it like this or more or less like that. It doesn't need to be absolutely perfect. I really wanted this to go into the value area, but I'm fine if instead of that we start doing a breakout like this. That means that the longs are entering and they want to make a rally to the top of the range, as we did in here, almost in there and in here. If we do that, we could be seeing the 107K. Let's see liquidations from the past 30 days. Yesterday during the stream, we have this 103.7 that we were talking about. We have the 105. Let's see if that is gone now. We have the 106.4. That is the largest of the past 30 days, but we have 103.2 for a potential pullback. Okay, so we got another data point saying, what if we go there and we do a healthy pullback? Fine. If we go to these ones in here, 96, then we start definitely putting things in a different perspective. So if we go there, we need to decide if we're going to add liquidity, volume to our trade. If we just go here, we just continue to watch. If we go to 106.4, we need to talk about the increased risk of losing the short-term liquidity and keeping a very close eye on the order book to see if we are actually going to make it to the long-term lowest hanging fruit in here that reaches up to 117K. Talking about the video on Saturday. Things that are worrying me at the moment in the market are the VIX. This is going to be a general market, very quick update before I let you go. We're back very close to the bottom of the range. We are at 16, bottom of the range is more or less 13. And every time we go to the top of the range, we get very nice top informations in the general markets. And every time we come in this area, low end there, we start calling for careful with the risk. Okay. Dollar is still bouncing from our support at 107. We do want to go below that. We are not getting it yet. Dollar seems still bullish and it has broken out from this W formation towards resistance. It is in a channel down, but we don't have a pivot, so we really cannot, connect it with anything until we get that pivot. So I'm gonna just remove the line for now. Nasdaq still going sideways, S&P as well, still below the resistance. After Nvidia came all the way down, now it's putting just a candle of indecision. Tesla missed the earnings expectation, so there's been a little bit of bearishness there. We already had 1 week ago a target towards $300 based on the bearish divergences. And after this big sell-off that lasted 5 weeks for Apple, finally we are getting here a bullish engulfing candle. We got the earnings coming in on Apple, so I suspect that people are trading the rumor. I really don't understand why people think that this is so bullish with the earnings unless they have some privileged information. But as far as I know, the sales from Apple are doing terrible this year with the iPhone 16. So in a nutshell, let's just watch for the VIX being at the bottom of the range, because that is the point where it can find a spring and bounce back up to the top of the range, creating some waves down in the market and then dragging crypto as well with it. Guys, I do recommend that regardless of you wanting to stay in the bubble of crypto, to watch my video one day ago about the general markets crash. Specifically watch the area of the VIX, the volatility index of the S&P. You're not gonna get the precise timing for a crash, neither the guarantee is gonna happen, but I want you to stay aware of the current risk in 2025 based on past performance, on the way that the VIX normally behaves. I identify some very crucial patterns that I'm not hearing many people talking about them. Yes, of course, many people are talking about doom can come anytime, and they're basing their analysis on other things. This is purely based on volatility projections and their likelihood of playing out this year. So being prepared for that might save you more than the day. Guys, if you want to trade Bitcoin altcoins on top-notch exchanges, consider opening an account on Bybit or OKX, or even better, both of them. Why not? You get access to a huge array of altcoins, leverage trading, and if you open an account using the links in the description, you can claim 30,000 in rewards on Bybit or 60,000 on OKX. That's all based on trading volume. If you want to stay away from needing KYC because it's such a hassle, get the chance to open as many accounts with different emails as you want, deposit, withdraw your crypto without having any issues. And most importantly, not needing to use a VPN to access your exchange is definitely very welcome. Bluffing at the moment, if you use the link in the description, we are offering even a Rolex or a MacBook Pro, iPhone, Nintendo Switch, depending on how much you trade and deposit. And if you go for 2bit, you can claim up to 30,000 in rewards using, again, the link in the description. This one is based on deposits and trading volume too. All right, guys, I'll see you in the next one. Take care. Bye-bye.